So, good morning, students. Today I'm going to start with the second chapter, that is dual effect of transactions and types of accounts. Now, in this chapter, we need to understand the meaning of the business transaction, types of account, the rules of the debit and credit, the identification of the accounts, that whether it is a cash transaction or the credit transactions, and the settling of the accounts or maybe of the credit side, that I'll later will teach you how to do it. The first thing, that is a meaning of the business transaction. Now we all know that the business transaction, that it has to be the business transaction, the monetary value should have been taken into consideration. The business transaction, if the transaction has to be done, either it should be in the cash form or the credit transaction. That means some of the monetary transactions should have been taken place. So you underline this, that business transactions means the exchange of product or service of business for cash or on credit between two or more persons. So that is the definition of the business transaction. Now the classification of the business transaction is to be done. The classification is based on the two aspects, that is the economic transaction and the non-economic transactions. Economic transactions, whether it is a cash or the credit transaction viewpoint, that is the cash transactions, credit transaction and other transactions, and the internal, that is internal and external transactions. We need to see very much clearly, my dear students, that the business transaction is to be divided into the two parts, that is economic and non-economic, cash, credit. We need to see how the cash transactions takes place and how the credit transactions are being taking place. Economic transactions, we all know that the transactions which is having the motive of gaining the profit, or where the monetary transactions takes place, that is known as an economic transactions. So where those transactions, the value of which can be measured in money or in the form of cash, or where the exchange of money is to be made in cash is to be made immediately or in future, is called the economic transactions. The transaction at present keeping the proposed exchange of money in future, which create a relation of debtor or creditor, are included in economic transactions. The first, that is the exchange of cash or assets. If you are exchanging cash or assets, that is goods and services, the creation of relationship of debtor and the creditor, that is assets or the goods or service, that is known as an economic transactions. Not wasting not much of your time, we need to look out towards the cash and the credit transactions. So the viewpoint, the first, that is cash transactions. In this type of transaction, the money is paid. Now, how to identify a cash transaction? That in this type of transactions, the money is being paid and received for the exchange of goods or services. Cash transactions for asset. In this category, asset is purchased by payment of money, or money is realized by the sale of asset. That is, a furniture of rupees 10,000 is purchased for business. So this is called as a cash transaction, because he is purchasing furniture of rupees 10,000. On the spot, he is giving amount of rupees 10,000. The asset is purchased, cash is gone. So that is known as a cash transaction. Yes. Then goods of scooter sold of 40,000. So cash goods are being sold and the cash is received, so that is known as a cash transaction. Cash transaction for goods, that is goods is purchased in exchange of money, that is goods of rupees 15,000 is purchased in cash and goods of rupees 18,000 is sold for cash. See, now here in this cash transaction for goods, the word cash is given to you. 15,000 is purchased in cash and 18,000 is sold for cash. Whenever the word cash comes, that is considered as a cash transaction only in the category of cash transaction for goods. Whereas in the cash transaction for asset, when anything is purchased, that is called as a cash transaction. Then cash transaction for service, that is cash is paid or acquired services, or cash is received for provided service. That is salary of rupees 12,000 is paid to employee. Salary is paid to the employee. So definitely the amount which is being paid, that is known as a cash transaction. So what these are the services, salary we are paying because the employees are working in a factory or a firm, or basically in many of the departments the employees are working, so we are entitled to pay him the salary. So whatever these services which we are giving to you, that is the amount which is being to be paid to the employee, that is known as a cash transaction, right? So these are basically the cash transactions. We need to see about how the credit transaction works. because there is a little bit only the small difference between the cash and the credit transactions. The transaction for the receivable and the payables, that is any amount which is outstanding to pay for assets, goods or service acquired in the past, is known as the payables. That is outstanding, which is required to be paid. It's not yet paid but is to be paid. That is known as in payables, and these are paid in the present. And any amount for which outstanding to receive for assets, goods or services paid in the past is called the receivables. That is already being paid. They are already paid in advance. That is called as in receivables, right? Example, the outstanding payment of 3,000 for goods purchased from these are received in the present. Formula is made and the goods of rupees 4,000 was sold to Rashmi. These are the transactions, the receivables and the payables. I will explain to you in the illustration is coming, so you will understand how this cash and the credit transaction occurs. Credit transaction means in this type of transaction, money is not paid immediately for purchase or sale of transaction, goods and services. See, we have already seen the different categories of whether it is can be of the goods or service or any of the based upon the transaction of assets, goods or services, right? So your credit transaction also is based on that only, but we need to check out that money is not being paid immediately. That is the most important thing. We need to identify that this is a credit transaction, because money cannot be purchased, right? Money is not paid immediately, so that is known as the credit transactions. However, exchange of goods and assets or goods services made in present, accounts are settled in future. From this transaction, relation of the debtor and the creditor come into existence. I told you the data. I explained to you how about the debtor and the creditor. Yes, the debtor, if the shopkeeper and the customers are there, the customers are called as an debtor and the shopkeepers are called as an creditor. So there is a transaction between the debtor and the creditor. In the purchase and sale of assets, service are made in the present, but their money is payable or receivable. For example, it is given here, goods worth rupees 4,000 is sold to Kalpana on credit. Now here the word on credit is there, so definitely it will suggest that this is a cash transaction. Apart from that, the goods are being sold to whom? The name of the party is mentioned over there. So that is also thing to identify the transaction. So whenever the name of the party is given to you over there, that transactions are called as an credit transactions. Kalpana becomes a debtor of the business and business becomes a creditor of the Kalpana. Yes, goods of rupees 4,000 is sold to Kalpana. Now goods are being sold to Kalpana, so Kalpana is the receiver and who is the seller? The shopkeeper. So Kalpana becomes a debtor and the business person, the shopkeeper, becomes a creditor. Goods of rupees 6,000 purchased from Deepika on credit. That means he has been purchased. Now goods of rupees 6,000 is purchased from Deepika on credit. Now my dear students, look at this point. Now this is the opposite point. Goods are being purchased from Deepika. So Deepika now here is the creditor, because she is selling the goods and the customer to whom she is selling, that becomes a debtor, right? So here Deepika becomes the creditor and the business becomes the debtor. Have you understood? Now if Deepika is selling the goods, if Deepika is a shopkeeper, she is a shopkeeper, definitely she will sell the goods, so she will be the creditor, and another person who she is selling, he or she becomes a debtor, right? That means in very short I have explained to you that the one who is selling is a creditor and the one who is purchasing, that is a customer or is a debtor, right? That is a credit transaction. So any name of the party or any credit transactions occurs, so that is known as a credit transactions. The other transactions, the transactions like that the goods have been destroyed or accident or the theft of goods, or goods given as donation, or goods given as advertisements, or defective goods, these transactions do not fall in the category, so they are neither the cash transactions nor the credit transactions, because in goods have been destroyed due to accident, goods have been due to theft, it has been stolen away, goods have been given by the donation. These are not cash transaction or neither the credit transaction, because everything is being washed away, everything is being destroyed. So we need to put in the category of other transaction. That means it is not a credit transaction or nor a cash transaction, right? Now, non-economic internal and external transactions, that we all know, this is somewhat just only for the viewpoint. This is not that much important from it, but you need to see the non-economic transactions. Non-economic transactions are those transactions whose value cannot be measured in terms of money. Yes, the value cannot be measured in terms of money. Not these are called as a non-economic transactions. Now, how to identify an economic and a non-economic transactions? Now, if economic transactions means we have already seen here, see in the basically the question over here, it was given to you here. Radheshyam is in the business of furniture manufacturing. He purchased wood costing of rupees 30,000. That means this is a economic transaction. Here it is given to you clearly that he is purchasing goods wood for rupees 30,000. So the transaction has taken place, the business transaction has taken place. So definitely that transaction is to be called as an economic transaction. Now, whereas here the non-economic transactions means whose value cannot be measured. Now the example is there, an order is received to supply goods after 1 month. Now he is giving the order, right? Now the simplest example I will give you, if now everybody's day by day you are going shopping online, right? If you are ordering it on the Flipkart, if you are doing the cash on delivery, that is a different thing, right? Or if you are paying the through debit or the credit card, again that becomes a credit transaction also. But if you are paying the cash on delivery, the order, if you are receiving order to supply the goods, that is after 1 month, that immediately that transactions won't be the cash transactions, or we cannot say that that transaction cannot be a economic transaction, because the transactions will not take place because you are only receiving the order, or you are only giving the order for the supply of goods, right? So that type of transactions are called as a non-economic transaction. Whereas a meeting is held for the consultant of expansion of business, so only meeting is held, only notice is given to that person, that is a non-economic transactions. Neither any transactions, cash has not been given to any person, or neither any economic transaction has taken place, so that is known as a non-economic transactions. We need to see in the illustration 1, and I will explain to you each and every illustration one by one, so that you will come to know how it to do it, and then you are going to write it all exercise questions in your notebook itself, right?